G'day everyone, welcome back to Pete's Investing. Today is May 26, 2023. This is the spot gold price update. On our weekly and daily, we can see here on the weekly we're just broken into a neutral positioning and with this massive bear candle, and on the daily we've actually broken down into a bearish signal on our indicator. We'll go through each of these, and on this hourly chart we show you a trading strategy which is based on the weekly and daily. So on the weekly, first off, we'll look at the triple moving average, and that's broken to the downside, and it's approaching its moving average. The triple moving average is 3, 5 and 60 of the price, and the CCI 150 moving average 5 and 50 is also turning down, but not yet full bearish mode. So you can see there it's neutral, and that's our primary major trend we look at. On the daily, we look at the trend as well, and that's broken into a bearish, as I said, but we also look at support resistance areas. And the price did about bounce off the 2082 resistance up here, and I've drawn this Fibonacci retracement, and the price has come back down and now broken down below the 50% level. Also, you'll notice this diagonal descending line, and it may well come down and rest on this possibly. We'll keep that in there and see how it goes. Of course, there's no guarantees in anything that we do. There's always probabilities. So one probability we've shown on a number of occasions, and if I zoom out, you see here some divergence which played out and worked quite nicely. This is a bullish divergence on the CCI versus a bearish divergence on the price chart, and the way to look at that, or to potentially trade it, is draw a channel in that range only to the highest point or the highest candle where that channel started, and that would have been at that point there. And as long as this CCI keeps moving to the upside and the price moving to the downside, we keep that as a potential change of reversal, and it actually did that. And the way you trade it is when it breaks outside of the channel, which it did there, and the CCI kept moving up, the price broke up, and we then place, in the short term, we place targets in our nearest Fibonacci retracements, and that goes back Fibonacci to the most recent high place, which was placed there. So the earliest or the most earliest trade or earliest exit you would have had would have been at that 61% retracement, but then it went as high as the 161 level up there. But I suppose to be conservative, you try and pick, if you're trading it, you try and pick a closer level Fibonacci retracement. So one of these areas would have been ideal. So that divergence worked quite nicely in terms of a reversal. But also where we are at the moment, this one's still currently playing out. We've got a bearish CCI divergence, and that's the CCI still moving to the downside. As you can see, the price was moving to the upside. Now this is also played out. So the way you look at that in terms of trading, again, let me place a channel for those from that high, and then pick the lowest candle, which would have been where that diagonal trend line was anyway. So when the price broke below that channel, which it did in that area there, you then place a target range initially, and that would have been between the 50 and the 61% level. You can see there it's just broken below the 50%, and it's currently now in this little range as a potential target area on the daily. So again, combining that with our trend as well, trend indicator on the daily, you would be a bit more cautious and safer, higher probability of placing short trades only and avoid long trades. Even though the weekly is still showing a neutral positioning, that may change sometime soon into a bearish signal. And at the moment, we're taking only short trades. Looking at the hourly, again, taking that logic, we apply that same weekly and daily trend and logic to the hourly fractal breakout. So only taking short trades. And again, up here, I've got a back test, and I'll show you this and what it means. So you can see there, during that whole period, while the price was going up, we had a couple of average downs during that period there in the beginnings, and this is the hourly chart, of course. But this major drawdown on our profitability, and this is a profitability chart up here, we had this major drawdown when the price is going against you. Now again, this is only going long, so the back test is long positions only. The same logic applies for putting short positions, but here we're just back testing long positions, and I'm showing you this deliberately to understand the effects of the drawdown if this happens to you. So again, you average down when the price depreciates by at least a 3 to 5% decline before adding further positions to it. Now, to avoid this drawdown, as I said, in the opening, you want to place only trades in the direction of the weekly and daily trends. So again, if you're going long, you can see there during that period, and that would have been the start of that decline there, which was April 22. So if I zoom back to April 22, which is that period there, and April 22 on the weekly, that period there, you can see there are no long positions on the weekly, and very few scattered long positions on the daily. So again, if you're trading based on the daily, if you're trading on the hourly based on the daily only, there's a lower probability of success, but still some probability of success. But you have a high probability of success if you trade with the weekly and the daily if they're aligned. So you can see there during that period, you would have placed short trades primarily during that period there. And again, I haven't shown you the short positioning program backtest here, but the same reverse logic applies, and that would have been a profitable trade had you placed it in short positions only during that period. You can see there more recently during that period when the price was going up, minimal averaging down. It's just one little average down happening at the moment with that decline. But again, you can see there on the weekly, long periods only. So that would have been an area you go long only and avoid short trades. So to understand how to trade this and other trading strategies, reference the links in the description below. Subscribe to my Patreon page where we look at weekly scans of stocks, currencies and commodities. We also answer any questions by Patreon members with any analytical questions they might have. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.